Ryan, I want to back up and talk a little bit more about earnings. You mentioned that briefly a couple of questions ago, and I got a chance to look at a graph that LPL Research put out of the looking back at 2019 and 2020 and seeing that nosedive in Q2 of last year and how well they rebounded and how it beat expectations in Q4. Take it from there on Q1 expectations and how they've just continued to be ratcheted up.
No, they absolutely have, Scott. So we'll see what corporate America has to say, but we are expecting first quarter earnings to be up over 30% year over year. Now, let's be honest, the first quarter last year wasn't great. Second quarter last year was terrible. Second quarter, when I'm with all you guys in 3 more months, we'll talk about second quarter might be up as much as 50% month over month. But let's say we hit 30%, which we think is possible here at LPL Research. That'll be the best year over year quarterly gains in earnings in more than 10 years. And again, it all comes down to what is going on. Your revenues are increasing, earnings are increasing. You look where the earnings growth is coming from, places like financials, technology, consumer discretionary, right? People weren't spending a lot of money a year ago. Now they're spending a lot more money. And again, I can tell you because Disney was packed. There's a lot of reasons to think that these earnings show, again, confidence is coming back. It's not perfect. I don't want to be all Pollyanna here, but there are clearly things coming back and people spending money and earnings. It's all part of the overall major new cyclical bull market that we think we're in and a new economic expansion, which has started, fairly recently. And this economic expansion could have a lot of life left to it in our view because of earnings.